All right, with markets in turmoil, obviously you guys are concerned about where your assets are going, what kind of yields can you get to, and also, are they still safe? We want to dive in today, take a look at a project called Midas.Investments. They reached out to us, said, hey, Paul, would you take a look at it? Let's do an AMA, ask us anything so we can learn a little bit more about what's going on. We'll dive in deep. My name is Paul Barron. Welcome back in to TechPath. So I've got Iakov Levin on the show with me today. Thanks for stopping in. We appreciate it.
Thank you guys for calling me. Hi, Paul. How are you doing?
Doing great. Can't complain. So Iakov, I want to first get into Midas.Investments, a little bit about what it is, the structure of it, a little bit about your background in crypto in general. Kind of give me a download.
Yeah, so basically I onboarded to crypto in 2017 and I was searching for various ways of investing, diving into the industry. And then in like 6 months after being in crypto, I bootstrapped it, Midas.Investments as the passive income generation platform. We were doing masternodes and staking back then, and in 4 years we managed to pivot ourselves to the full asset management that produces fixed rates, and now we are pivoting and actively using the CDFI strategy in order to produce deals.
Okay, so I want to get into that CD DeFi because that in itself is quite unique and different than what we've seen within the industry overall. Explain what that is, how you guys came about in terms of the development of it.
Yeah, sure. So the way I saw the CeFi and DeFi is like those two polarities that are not really tied to each other. CeFi makes things like making illusion that DeFi is not existing, and DeFi just hates CeFi for all of the reasons that we saw in the recent months. But in my thoughts, that the only way to create the financial services of the future, the wealth generation mechanisms available for the retail users, is only by having CeFi part as the retail part of easy interface, easy interaction with investment strategies, and keep the DeFi part. And DeFi part is about transparency. DeFi part is about telling where your money is flowing, sharing risks actually with investors, giving opportunity for investors to make the due diligence of all the investment strategies that their capital is used at, and create basic blocks for their wealth generation in order to combine the portfolio for risk management of any certain individual. And there comes the DeFi part. And obviously we see DeFi as this amazing technology of investment blocks. And you have the liquidity, you have the lending services, you have derivatives on top of the DeFi, and so on. So this is the unique infrastructure for building investment products, especially building investment products on top of the DeFi protocols, but with easy to use interface and available to everyone.
All right, so trying to use the best of both worlds. Obviously, we've seen the downfall of centralized exchanges. You look at decentralized platforms like what's happened with Celsius, obviously with Voyager. Now, that seems to be it's easily bringing up everybody's radar in terms of, one, being very cognizant of where they're holding and storing their crypto, and even more so of what they're doing in terms of any type of fiat investment. What would make you guys so much different than what's happened over at a Celsius, a Vault, or even a Voyager today when you look at kind of the landscape of where investments are going? What really makes Midas unique and different?
Yeah, so the way I see the collapse that happened in the CeFi market, and we were thinking about this for quite a long time. The CeFi stuff is not like in the last month. We were working on this for months now, and the main core problem of the CeFi platform, any CeFi platform, is the long tail crypto risks. So the main motivation for any CeFi platform is to get the as low rates as possible to give to users and find the source of generating higher yield. And in terms of every CeFi platform, it was the institutional lending. And this institutional lending obviously got ended up in 3 Arrows Capital because of their reputation, because of their no collateral borrowers and so on, and it ended up in Anchor. So the way we see it is like delegating risks to other entity, but in this case, it was only in one huge pot. So and it all collapsed. The way we are different from the Celsius and from any other CeFi platform over here in crypto market is that we are basically an asset management. So we have the DeFi department, we have investment development department, we have quant analytics, algorithmic tools, and so on. So the way we manage fixed rates that we produce to the users, we have over 30 various positions in DeFi. Each of those have alerts on protocols, on liquidity, on any major changes for this protocol, which allows us to avoid hacks, avoid depegging scenarios, and so on. So we were not exposed to UST hack, we were not exposed to staking Ethereum depeg, simply because we have all this system that monitors this thing exactly. So the way we do due diligence for the DeFi protocols allows us to pick the correct ones and pick the low riskiest ones. And on the other hand, and I'm talking about Taleb's strategy of barbell, where we have 80% of assets in liquid protocols, and this is another change that we have with Celsius, is that all our positions are liquid, and this is why we never closed withdrawals and we never suffered the potential event where we had to stop withdrawals. So in one way, we have DeFi protocols that are heavily due diligent, that are monitored 24/7. If something goes wrong, we have the call to every our operationists, even in the night, they need to grab the call and make the action to save the position if something mimically random happening, so they need to check it. And on the other hand, we have algorithmic strategies that are great for volatility, that are great for trends, and so on. And we are able to compare and to combine these strategies, algorithmic strategies that love volatility, that love a trend, and with liquidity pools that hate volatility actually, and that hate trend movements, that they love flat movements. So this is the combination that we're working on, and it showed a really great results over the last 8 months. So we are really feeling confident that this is the unique opportunity for Midas to step into this market and to provide something unique and something trustworthy to the CeFi market, to all those users that were really hurt, and I feel their pain, and I really empathy them, because it's but it's just had to happen, and the industry needs to evolve, and the only thing for us to evolve is to combine everything.
I think there, obviously the scenario that many companies are facing right now is the centralized scope of things and the over leverage, the centralized issue of having so much in scenarios like what Voyager did with a $650 million loan to 3 Arrows Capital, unsecured. Those kind of actions are, in some cases, people just look at that as just bad management. Obviously, clear negligence, and to a certain extent, of having that kind of non-diversity. What you're claiming is that there's a lot more diversification here that eliminates, any one particular area that would cause a major, issue within crypto to cause scenarios like, withholding withdrawals, etc. I was looking at your chart here on your tokens and the earn and yield numbers, and these are in some cases people would look at this now. 3 months ago, people would look at this and say, hey, this is kind of market right now. We're seeing 9+%. But today, a lot of people would look at this and say USDC at 14.5% would be unbelievable in the sense of how you would be able to pay yield of that high. So explain to me how you guys are capable of paying these kinds of yields when we're seeing such a dismantling of DeFi right now, mainly because of some of the activities that many of these companies are facing today. What really makes you so unique and different in this process?
Yeah, I think the thing that really stands out for us, yeah, and our competitive advantage above everyone else is that we have an amazing algorithmic team that really that creates this strategy for us to not only to manage risks. So, for example, all those trend algorithms allow us to indicate the start of the trend, the reversals, and vice versa, in order to uh, manage the risks for any directional positions, for example. So basically, like DeFi part, I think it covers like 70% of our rates. And the other part of the rates comes from the market volatility, from Bitcoin going down, from Ethereum going up. And we manage like only 5-7% of our portfolio in algorithmic strategy. But this is enough to cover during this really volatile, in really harsh times, because actually our algorithms, some of them, on the current results are making like from 50 to 100% APR. And we regularly adjust our rates based on how our portfolio is performing. And in the next phase, we're going to adjust the rates again. But with adjustment of the rates, we will present the new investment products like soft long or soft short on the market, and the basket of the amazing DeFi investments that we due diligence and presented to the community. So we are moving towards making the portfolio as transparent as possible, while creating these investment blocks for our users to pick something from the market, and not getting all the yields in the centralized entity, instead of this reversing it to the users, while allowing them to maybe pick some risky investments if their vision for the crypto market is fit within this investment strategies.
All right, so I get the process of using investment strategy, obviously, to get to these yields. This is one of the key things in terms of the assets, because there's now kind of two camps out there within crypto. You have the self-custody camp. You have, obviously those who are invested in exchanges, in investment houses that, of course, are utilizing, fiat assets to go out and essentially earn what you can within the market as it is today, even though we are seeing some volatility within that. With that being the case, whether it's self-custody or looking at a CDFI kind of scenario, how would you argue the basis of self-custody to being able to risk those assets in some of these volatile situations like what we're in right now?
I cannot say nothing about self-custody. It's like it's one of the best wealth generators for the users, and I cannot say like, hey, CDFI is better than self-custody. CDFI comes with the risk. Our platform comes with the risk,
right?
And the user should treat it as a risky investment, and I'm not encouraging to put all the portfolio to Midas. And in this case, I would only say that hey, jump to our community and engage in our discussions about DeFi, about everything that happens on the market, about the investment stuff that you can do on your own. And we are revealing our DeFi secrets and DeFi strategies, and educate the users. So the way I see it is like picking the right time for the market, creating your portfolio, educate yourself about investment, because crypto gives the responsibility of investment management that not many people are aware of. Not many people are aware that that this is your funds, this is your bitcoins, and you are the guy responsible for them. So make the full due diligence of Midas, of every other product that you're using. Gain your experience, because you are the asset manager of your own finances. So this is my words about self-custody.
Yeah, for sure. I think most of our audience, they're very diversified, whether it's some in self-custody, certain amount of their portfolio is in risk assets, because that's where some of the gains are. Obviously, if you're into volatile trading, maybe you're just trading spot. There's a lot of different types of investors that that follow our channel. So it is interesting to see kind of the variations of it. When you look at the future of where the industry is going, and kind of last question here, the issue of a Celsius or a Voyager or a Vault, these kinds of high yield platforms, some people would question whether or not these can sustain themselves in the future. Do you think we're going to continue to see high yield platforms exist in the future for sure?
Yes, I think yes. And I will not say that all of them will be safe and secure, sadly, because the main attractor for crypto market is yield and proof of work, proof of stake,
right.
DeFi, everything is revolves around yield. So there will be always the demand for the effortless yield generation process. And I see our mission to make it like DeFi transparent, like where you can see the wallets, where you can see the protocols where your capital is into. But in terms of the overall CeFi market, I really hope that that these events will create the new players for the market in order for it to become more mature. I really feel that with a really skilled team, you can easily generate this rates that like 10% APR per year. You can easily do this. And the way the collapse of Celsius and Voyager, it just shows the hidden risks of lending within the crypto market. But if you manage the capital yourself with a certain level of transparency, with the asset management level of transparency, it should be okay. But obviously, keep in mind that you should know where the yields are coming from, because it's the main switch between Ponzi and CeFi platform, which is really.
Yeah, that I think is probably the biggest scenario, is the transparency within these platforms to truly understand that. Because I think had people had the vision into what Celsius and also even to a certain extent what Voyager was doing with their capital, it would have been kind of scrutinized much heavier. I think immediately we would have seen a lot more drawdowns on both those platforms, possibly forcing their hand to make changes in the way they invest in yield activities, which I think is kind of the scenario. So I do agree with certain aspects from all investment products, much like what you guys are doing, is that the more transparency that's there, the better it is for obviously the investors themselves. So I would agree with you there for sure, Iakov. All right, so last question I have in terms of the token, because what utility does the Midas token have in being able to support the ecosystem?
Yeah, sure. So Midas token was launched 3 years ago, actually, with the Masternodes coin, and only like 8 months ago we swapped it towards Phantom token, and now we have plans to merge to Ethereum, which I'm really excited about. So Midas token is the token with a long history, and the main utility for Midas token was always the buyback feature, where we are using parts of our yield generated towards the purchasing Midas on the market. Currently, it's called Midas payout split. So this is the main driver of the market support. Additionally, the current utility that you can get with Midas is Midas Boost, basically earning more if you pick the rewards in Midas. In our backside, the yields that you are earning and swapped towards Midas are transferred to the decentralized exchange, where we are purchasing Midas on those assets that you chose to swap to Midas. So basically, this is like the bond mechanism for supporting the price, and it's overall creating the healthy demand from the success of the platform, from the user picking. The more users are picking Midas Boost, the more buy support regularly the coin is getting. And the way that I'm thinking about talking about long term is creating this CeFi token, and CeFi platforms have really centralized tokens. I do not want that, and we have a really vast amount of holders and users, and the way I see we can do the amazing stuff around liquidity on DeFi is like actively participating in governance process for Convex protocol, for Curve protocol, and so on, and vote for example, for Midas liquidity pool in order to receive emission from the protocols itself, instead of how it usually is made in DeFi from the token emission. And we have the only token emission that we have and planning to have is the staking contract. So we have really low emission, like 27% per year. And so a highly deflationary token with the buyback mechanism, with the support from Midas Boost, and with the solving of the liquidity issue by partnershiping with as many DeFi protocols as possible. Currently, we're talking with SpookySwap and SpiritSwap, on Phantom.
Right. I think the buyback mechanism is one of the key elements, obviously, with that to help sustain the, the ecosystem and the price infrastructure there within it, for sure. Listen, it's going to be interesting to watch, because I think we will see more and more of these types of projects, investment houses, investment concepts come to market. So it'll be interesting to see how these develop over time, especially with the market in such turmoil right now. There's some great opportunities out there in terms of yields, so maybe this is something that people will check out. But thanks again for stopping in on the show today. We really appreciate it, Iakov.
Thank you, Paul. Thank you for having me. Bye.
All right, so you guys are tuned in over on the podcast right now. Make sure and tune in over here on the YouTube channel. This is the place where you're going to catch all these great things, from our Diamond Circle to a lot of our breakdowns on a token analysis. We do a ton of deep dives on Bitcoin, Ethereum, along with a lot of altcoins. We've got a whole series out on many of these things. All you have to do is hit subscribe when you do find us here on YouTube, and like a few videos. It'll let you know when we're going live for our live streams, all that good stuff. If you want to reach me, it's out on Twitter at Paul Barron. We'll catch you next time right here on TechPath.